Hello everyone, welcome to this afternoon's live stream after the payrolls have come out, beating expectations with I think 800,000 jobs versus I think was it 650 expected. As usual, if you can just confirm that the sound's all okay at your end, that'd be great. If you can't hear things properly, if you make sure the volume on YouTube is turned up, that'd be good as well. Right, let's get into it. So just to explain how this works, we'll spend most of the session, the next hour, on our trading platform, on the Capital.com trading platform, looking at markets. US stock markets so far, like the payrolls, bit of a blip up. You can see it there on the 5-minute chart. We'll look at that in more detail. So we look at the normal markets, what's going on, then what do you do? Then if you have any markets you want to look at, if you put them in the questions, I go through them once we've looked at indices, commodities, gold, oil, crypto, FX, that sort of thing. Okay, so it's the weekly recap and the market outlook for next week. Let's do a risk warning first of all. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs, contracts for difference, are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, a quick look ahead to next week. So a few bits to keep an eye on next week. Tuesday, July the 6th, we've got the Australian interest rate announcement. Wednesday is probably going to be a big one, July the 7th, the minutes from the latest Fed meeting. I mean, clearly, inflation, interest rates very much in focus at the moment. So that could be an interesting one on Wednesday evening. See what the Fed are thinking about all of that. Oh, and I missed the other one. And on July the 9th, next Friday, China inflation. So again, inflation is a big deal at the moment. Let's see what the inflation rate is like in China. But I think next Wednesday's Fed minutes are going to be the big one for next week. Quick contact thing. To find out more about the platform, the trading platform I'm using today, go to Capital.com. To find out more about me and trading ideas during the week and my trading course, go to davidjonestrading.com. Any questions after today, drop me an email, david.jones@capital.com. On Twitter, I'm @JonesTheMarkets. And of course, follow Capital.com on Twitter, YouTube and Facebook. We've also recently launched a new stocks channel. So I think there's a video going up on Microsoft later today. The link for the stocks channel is in the description of this video. So if you're watching now or watching the recording later, if you click on that link in the description, you can go to our stocks channel. Similar format to this channel, we push out 3 different videos every week on different stocks. So that's it. Go over there and subscribe to that. And that's our US stocks channel. Right, let's get into it. I think we'll start off with stock markets. What can you say? The same thing every week, to be honest. The trend is up. S&P 500. So basically, if you'd bought the S&P at any point up to about 2 hours ago, any point in its history, you're sitting on a profit if you still held it, of course. The market's at all-time highs. Again, this market is in an uptrend. What can you say? Just people are buying the dips. We had a bit of volatility, quite a bit of volatility in June, but the market's bounced back. And I think I did say somewhere, I can't remember where, but I said the fact that we'd had this fairly sharp sell-off mid-June, the fact it had broken out to all-time highs again a week and a half ago, does suggest that it's a strong break, or it does to me anyway. I don't know what you think about it. Don't care either. But so for me, buying the S&P has been a great trading strategy in this trend. Obviously, we've had a breakout again today. At some point, we're going to get a dip again. We're going to get a half decent dip. The area I would watch, the area if it broke and I'd start to worry, would probably be the May lows. So the May lows are at 4,035. If we sold off and broke below there, so that would be about a 7% fall from where we are now, then perhaps this trend looks like it's in trouble. But look at the trend. I bet there are loads of people going short this market, trying to pick the top. As I said in the risk warning at the beginning, 75% of people lose money when trading. I think a big reason why people lose money is they don't go with the trend. And I think we've got an obvious trend in the S&P. So for me, still be looking to buy strength and buy dips in the S&P. Right, Nasdaq, again, not surprisingly, fresh all-time highs for the Nasdaq today. What's that crazy comment? You don't like Bitcoin for its volatility, but you do support for its philosophical reasons as how traditional finance is broke and corrupt with all the printing and negative interest rate. No. I don't think I've ever actually said that I'd support Bitcoin for philosophical reasons. So no, I think you're confusing me with somebody else there. Right, so the Nasdaq, fresh all-time highs on the Nasdaq. Again, it was interesting, the Nasdaq, because it was a bit of a lagger April, May, the Nasdaq, and it's again really got to move on from June. We've gone breaking through the old highs, 14,060. Those old highs were at 14,600 and something now, 65, 67 now. It's another trend that's really strong, and clearly at some point, these trends will run out of steam. And there's always a lot of talk about markets crashing and all of that sort of stuff. But we're not getting it. I think there's a classic quote that bull markets climb a wall of worry. When markets are going up, lots of people worry about when the crash is coming. If you'd have been sat on your hands worried about a crash the last 2 months, the last 3 months, the last 6 months, the last year, you've missed out on a lot of opportunity. So for me, I've got trades in my own account, long Nasdaq, long S&P, with sensible stop losses in place. I think they're really interesting markets to trade, and for me, I'm still looking to buy the dips. And again, on the Nasdaq, what would be the level I'd worry about? Probably if it started trading below 12,800, so about 15% lower than where we are now. If we had a 15% fall in the Nasdaq, then perhaps this trend looks like it's in trouble. But for now, the trend is still strong. And it is quite incredible. I think there was what's the Nasdaq done since its lows? It's 14,500 now. It's more than doubled off those lows of March 2020. So if you looked at it logically, are tech stocks really worth double what they were 15 months ago? You'd have to say logically, probably not. But also, you can't argue with that trend. So for me, in markets, do you want to be right or do you want to make money? And I think those two factors are not always aligned. You may well think that tech stocks are overvalued. At the moment, the market is disagreeing with you. Let's see if it carries on. DAX, the DAX has been a bit of a funny one. German stock market, been quite flat now for the best part. Well, it's been a month, hasn't it? Really, we did see very briefly fresh all-time highs beginning in middle of June, very briefly, but a little bit flat. But again, for the DAX, the trend is still up. We've had you can see fairly tight trading the last couple of weeks or so. But for me, the trend is still up on the DAX. We'll have a look at the Ftse, then we'll look at the Nikkei, then we'll look at some other assets. Ftse is a bit of a weird one. I don't know, the Ftse is getting hit a bit today. The Ftse is a strange market anyway, as I often say, because so many of its constituents derive their earnings from overseas. So what's happening with the pound will have an impact on the Ftse. But for me, that trend, I think I picked up on the trend off the January lows. And that trend for me is still just about going. I think I need to just maybe do that for the trend line. So I'd still be, a buyer on dips of the Ftse, but I think the trend is clearer in the S&P and the Nasdaq for me, but that trend is still up. And finally, the Nikkei. I think the Nikkei is still lagging. The Japanese stock market, I put this line on it, I think it was last week, and it just can't get out of this correction. I've got a trade on the Nikkei that has been running for ages and is going nowhere, but you can see the correction since Feb. So the Nikkei hit a multi-year high in Feb. And then since then, you can just see just correcting. So, I don't know. It needs to break 29,500 to get a move on and start perhaps some further strength from here. But it's been a real lagger, as you can see, for the last 4 or 5 months, the Nikkei. So it still looks a bit drifty to me, particularly when you compare it to the likes of the S&P and the Nasdaq. Right, let's take a look at some other markets. Should we do gold and silver? I did a gold video earlier this week. I can't remember what I think, did I buy it? I can't remember. Hang on a second. Or did I put an order in? I put an order in, actually, and I don't think it's been filled, the order. No, I put an order in at 1740. It didn't get filled. I thought it was interesting. I'd be a buyer of gold down here, I think, if I was going to put my cards on the table. So for me, long-term trend in gold going back to the August 2018 lows is still up. We had all-time highs last summer at 2,075. The market then has been just in this correction, broke out with a correction in May, so only 6 weeks ago now. And this sell-off has been a particularly vicious sell-off with that Fed statement in June. But for me, I still think, because no one knows, but I still think the break of the correction is valid. If I had to do a trade now, I'd be a buyer. And the closest I put my stop, an aggressive stop, would be underneath the low from late June. A bit of a looser stop will be back below these April lows. So for me, I do wonder going into next week, have we seen the worst of the falls in gold? Let's see. If it breaks below 1750, I'm wrong. But I wonder if we'll see it start trying to claw its way back up to the 1800s and back up to have a look at these old highs from the end of May. So we'll see. We'll see what happens. But quite interesting for next week, gold, particularly with that Fed announcement as well. Silver, the silver video went up on the channel yesterday. Boring market, silver, as I always say. There is a trade running on silver from a couple of weeks ago. 17th of June, bought at $26. The market's $26.35. And the video I did yesterday, again, look at silver over the last year. Look at all the excitement, not the last year, but since last August. All the excitement we've had in loads of different markets. And silver has just been sideways. So, I mean, I think there are, ranges and swings within the sideways range to trade. But it's been a fairly boring market. So the video I did yesterday was, I think it might go up from here. I put an order in to buy at 26.70. So I've got an order sitting there, this point here on the chart. If that order gets filled, put a stop loss underneath the low. So you can see again over the last couple of weeks, we've been bang, bang, bang in this sideways range. So, so for me, we need to break out of that range. But it's still, it's done nothing to change my opinion of it being a boring market, which offends some people. But look at what's in front of us. We just chop, chop, chop over the last 10 months or so. So it's been a fairly dull one. So that's silver and gold. So gold, maybe we'll see a bit of strength next week. Oil's really interesting. What's oil doing? It is going up. Again, that should be no surprise. The trend is up in oil. So just yesterday, traded up to 75.70, which was, I think we'll go back to October 2018. It is interesting up here now, I think, oil, because if we flip this over to a weekly chart, we're running into the last major peak for oil, or one of the major peaks of recent years. The price of oil peaked September 2018, up at around, $77. So we're within $2 or $3 of that level. So it's really interesting, I think, what happens up here. For me, I'd still be a buyer on dips in oil for now. Just because there's a big resistance level coming up doesn't mean the market's going to run out of steam up here. I do have a trade on of my own of oil anyway. But for me, from a short-term point of view, if we looked at, what trend should we look at? If we looked at just the move over the last couple of weeks in oil, maybe something like that. If we saw it get knocked back next week, back towards 73, I think it looks interesting again, because 71 to 71.5 has been a real floor for oil. So I don't think we've seen the top yet, because it was only yesterday it made that fresh high. I think it will be interesting up here, given that we're running into these old highs, which are pretty major, from October 2018. If it breaks 77, where next? $100 a barrel? Let's see what happens. Let's see if it breaks 77 first. Another great example of the benefits of trading with the trend. Rather than trying to pick little tops, just trying to lock in to the major swing in the market. I saw someone mention natural gas in the chat, so I'll have a look at that, because we're looking at oil anyway. So we do have a trade on in natural gas. So for those of you who haven't watched this before, in the market videos I do during the week, I always try and put a trade on to make it a bit more interesting. And natural gas is our biggest winner, I think, at the moment. So bought it 4th of June at 303. The market is currently 367, so it's up 790 quid. For 250 quid risk, that's made 3 times the risk. It's been a great trade, that one. So I think I've moved the stop on that to 340. But I think it's a difficult one, natural gas, because clearly the trend is up on natural gas, off these lows now, these April lows. You can see it really accelerated away over the last couple of weeks or so. But it can just reverse so quickly as well. It's a strange old market. But we're now on natural gas at levels not seen since 2018, December 2018. So it's a 2.5-year high for natural gas. So for me, if I absolutely had to do a trade now, I'd be a buyer. Oh, I just lost my chart then. In a sec. The only question is, where does your stop go? And I think it would go the other side of 355 on natural gas at the moment, if I didn't have a trade on. Perhaps the better trade is to wait and see, do we get a bigger correction down towards 340? But a great trend on natural gas. Quite a bit of bearish divergence on the RSI, so where the market's pushed to a high and then has pushed higher still, the RSI hasn't followed through. So that can be a warning of a top. So bearish divergence, I think, is always worth paying attention to. But let's see what happens. I think for me the better trade, like I say, would be if it got knocked back. It looks like an interesting one if it gets knocked back to 340-ish. But that trend is still up. But with natural gas, who knows? Monday it could be at 4 or it could be at 3. It does have these spurts of great volatility. Let's have a look at the cryptos. Cryptos, a bit boring, I think, the old cryptos over the last week. Bitcoin, nothing. Just we had that false break the other week, June the 22nd. So for me, I'd argue the trend is still up off the March 2020 lows. Trend line coming in at 20,000, but in the short term, I do think if it goes below 28,000, we could see a much deeper sell-off to the low 20,000s. But it's been, it's again just a fairly boring few weeks really for Bitcoin. Lots of volatility. We've seen 20% swings up and down, but for Bitcoin that's fairly quiet. So I just it's not really a market that interests me too much at the moment. If I had to do anything, I'd probably be a buyer. But let's see what happens. Ethereum, I think we're going to see similar sort of stuff on Ethereum. There we go. We had the false break, not quite the false break on Ethereum. So again, for me, I'd be if I was trading it now and I had to do something now, I'd buy it now with a stop the other side of those lows at 1,700. So it's a 15% plus stop. But these are volatile markets, so you need to give them a bit of room to move around. Let's take a look at but pretty boring. Let's have a look at some of the FX markets. We've seen really continued weakness for the pound against the dollar, the euro against the dollar. I think it's interesting going into next week because it's all been a bit sideways, it feels, the last few months for pound against the dollar. But we are coming back to what has been an important level over the last few months, down around 136.50 for the pound. We've got a bit of bullish divergence this time around. We're doing all the divergences today. So the market slipped to a low there. RSI very oversold, slipped to a low again, lower low, but the RSI's made a higher low. So it could be interesting to watch for a bounce next week in pound against the dollar. I wouldn't be a buyer today, but maybe we'll see a bit of strength coming next week. I think if we start slipping below 136.60, we'd be on like a 5-month low, and perhaps we see a bit more pressure building. So I think it's an interesting one to watch next week, pound against the dollar. What was the other one? Euro, US dollar. Same thing again for the euro. It's almost right back on that trend line. So I don't think trend lines are set in stone, but the trend from March last year did a good job. Races away, came back close to it in March this year, had a bounce, and we're back on that trend line again. So again, I think for euro US dollar over the next couple of weeks, it's interesting. We've got these big lows at 116 from September and November. We've got the trend line at 118, pretty much where we are now. If it's going to bounce from anywhere, you'd think it would start thinking about a bounce now. It's not at the moment, it's still weak. So I think it's an interesting one again in the next couple of weeks. Perhaps we'll have a bit more clarity in a week's time on euro US dollar. So that's it. That's the normal markets done, I think, isn't it? So I think the interesting stuff. Well, I think the FX is interesting to see what happens next week if we get some strength coming in. Gold is interesting, again, for the same sort of reasons, to see if we see a bit more strength coming in next week. Stock markets, those trends are continuing. So for me, still looking to be a buyer on the dips. On stock markets, a bit volatile now, but still strong stock markets. So what we'll do now, we'll jump into the questions and see if you've got any questions. So question number 1, right at the beginning: First Trust Nasdaq Artificial Intelligence and Robotics ETF. It's not the snappiest named. First Trust Nasdaq Artificial Intelligence. Nasdaq. Don't know if we. Oh, there we go. Look at that. So this fund seeks investment results that correspond directly to the price and yield of Nasdaq CTA Artificial Intelligence and Robotics Index. Okay, so it's a way of getting exposure to that sector of the market. Never ever looked at this before. Let's take a look at it. Let's see. So March last year it was $22.50. Got near 60 in Feb. For me, it's a bit boring at the moment. It's a little bit boring at the moment because it's just gone nowhere, hasn't it? So for me, what would you do here? Well, I suppose you could argue from a charting point of view, it's sort of breaking out here, isn't it? So for me, what I would do, think, okay, it had a little look through these old highs, and these highs have been a problem since March, around $50.60, $54.60. I had a little look through at the end of June. So for me, if it broke through 55, I'd buy it, because I'd be looking for a run back up to those old highs from Feb, just ahead of 60. But you can see, just looking at what's been going on, it's been pretty sideways and choppy the last few months. But I think if it breaks 55, it starts to look interesting again, and perhaps we'll see strength back up towards $60. So let's see how it goes. Please advise what leverage to use during trading for a beginner. We did have this question last week. I don't know if it was you. I find using higher leverage for large cap stocks very useful and more profitable. Your thoughts? Like I said last week, all the stuff I do is leveraged. So I use whatever leverage the broker allows, and clearly there are rules. I'm based in the UK, so the Financial Conduct Authority in the UK has rules about how much leverage you're allowed. I'm perfectly happy using leverage. I would say the only thing I would say, and I think the example I used last week was Apple. Let's say we're going to buy. Let's use Microsoft because they're at all-time highs. Let's say I want to buy Microsoft because they're at all-time highs. So I'm going to buy them. If I bring the chart up, buy Microsoft. They're $275 a share. I'm going to buy 10 Microsoft at $275. So I've got $2,750 worth of Microsoft if I did that. My margin requirement is, you can see here, £400. So I'm using leverage. So I'm using about 5 times leverage, probably. And I'd have a stop loss. I might have a stop loss at 260. So I'm perfectly happy using leverage because I'm not going to hold the stock all the way to zero. So for me, using leverage is a sensible way of trading. The only thing I would say is don't go crazy and use all the leverage in your account. So this account at the moment has got 15.5 grand in it. So I could buy 500. Oh, hang on, not quite 500. 300. There you go. I could buy 350 shares in Microsoft now and tie up 14 grand of leverage. That would be absolutely ridiculous to use all the money in my account on one trade. So I don't think leverage is a bad thing as long as you know how to use it properly, and just don't overstretch yourself is what I'd say. So I don't think leverage is bad for trading, but don't go crazy. Did you get stopped out of silver? No, we're still in that trade from whenever it was. Silver trade is still going somewhere. There we go, 17th of June. Still going. Do you know when the Australian license? No, I'm not sure about that. So I don't know anything about that. Where would you put a stop on a 6-month trade on the S&P? Good question. Let's have a look. For me, it would have to be a wide stop. And for me, I would probably, if I was buying now with a view of holding for 6 months, and I do have, I think, at least one trade on the S&P that's been running for perhaps not quite 6 months, but a few months. For me, the closest I'd have my stop would be at 4,000, which is about 10% away, roughly 7% away from where it's trading now. That's where I would have my stop if I was taking a longer term view on the S&P, and maybe even back down here at 3.8 and maybe even below the March lows at 3.7. So I would look at previous major lows if I was doing a longer term trade on the S&P. So that's how I'd look at it. What do you think about Burberry after the stocks dipped after the chief resigned? It was a bit of a surprise, wasn't it, that the guy left Burberry to go and work for another luxury company. I can't remember who they were, but let's have a look at Burberry. It looks like, I don't know, it's a strange one, isn't it? I'd be tempted to be a buyer. Taking the view that perhaps the market has overreacted on Burberry, and I'd say the trend looks perhaps something like that. I mean, it has sort of followed through a bit. I would be a buyer. I'd be a bit worried that we are back to 2.5-year highs on Burberry, from 23 to about 23.70 on the stock. But I'd be tempted to be a buyer with a stop loss perhaps down at 19 or something and take the view, or maybe the market's overreacted and we'll swing back up to 23. But it's an interesting one, isn't it? It's an interesting market reaction to news that one, because markets often often overreact in both ways to news. It'd be interesting to see if that ends up being an overreaction there. Copper. Yeah, I think copper's a buy. I think. We've still got a trade on copper in this account from ages ago. It's losing money. It's down 68 quid at the moment. But I think copper, I had a look at it a bit earlier. Looked like it's still sort of hovering over that longer term trend. So clearly it's well off its highs. But for me, that longer term trend is still up. You know, we've got lots of support from about 385 through to 4. So I think it's an interesting one for next week, copper. If I was a buyer today, the absolute closest I'd have my stop, the other side of the 21st of June lows. I'd probably give it a bit more room than that. But I think it's interesting. While that trend holds, while sort of 385 to 4 holds, for me, the trend on copper is still up. So let's have a look. Let's see what it goes. Platinum. I think platinum's an easy one. An interesting one. I did a trade on platinum this morning, actually. We'll see how it turns out. But the trend had been up. It's broken below the trend line, but I'll always give stuff a second chance if it breaks the trend line, that perhaps, again, it's a bit of an overreaction. So I think it's going to be an interesting week next week. If I was a buyer now, the absolute closest I have my stop will be under 1,000. I think if it starts breaking below 1,000, the risk is it'll pull back into this September to November range, 800 to 900. But it'll be interesting if if this old low is going to hold, and perhaps we get a bit of strength in platinum. Let's see what happens. Cotton. Let's have a look at cotton. Still, I did have a look at this, I think, because I do have a trade on cotton that hasn't done too much recently. But for me, that trend line was doing a really good job. And you can see there, the trend was up. And it's just messing around on that trend line. So I'd argue that the trend is still just about up. And if I was a buyer now, I think that the closest I put my stop is under 80 on cotton. So for me, I'd be looking to see, can it get back up to 90? Would be the sort of trade I'd be looking at the moment. So I've still got my open position in cotton. You know, it's been a pretty boring couple of months. But for me, as long as we're above these old 76 to 80 lows, I'd still be happy to stay long. But it has clearly lost quite a bit of momentum over recent months. BW Offshore. I'm not sure what that is, but let's have a look. BW Offshore, there we go. What is it? Develops, owns and operates oil and natural gas floating production storage and Norwegian company. It's a bit thinly traded, isn't it? I don't know what's going on here. Maybe we've just got missing data. To me, it looks a bit boring. It looks, I mean, what do you do? It swung from October 21 to 42, nearly doubled, and it's at 31 at the moment. So it's in the middle of the range, isn't it? So it is, it's almost a coin flip for me here. So for me, I don't know what I'd do with that. There's nothing in there for me at the moment, to be honest. It's a hard one to call, isn't it? Because if you looked at the last 12 months, it's actually sideways. You know, we've seen some good swings in that sideways move, but it is sideways. And at the moment, it's in the middle of the range, almost slap bang in the middle of the range. So for me, there's nothing there at the moment. So not much to help on that one. Euro Huff, yes, we looked at Euro Huff, didn't we, the other week? I still think it's a buy, Euro, against the Hungarian forint. And we were looking at it. We looked at it a few weeks ago, and they had this great trend going back to March 2019. And it'd fallen out of the trend, and I wondered where it was going to stop. And it stopped here, ahead of these old lows from June and August. And I'd be a buyer. So if I had to buy today, I'd be a buyer at 351.72 with a stop the other side of these 344 lows. So I wonder, will we see it gradually, the euro against the Hungarian forint, move back up to 364, 368 again. So it's an interesting market there, I think. Okay, Euro Huff. Copper, we looked at copper, didn't we? What do you think of the SHIB token cryptocurrency? Oh, let's have a look, shall we? SHIB token, SHIB US dollar. It's just a bit boring, isn't it? So I've got no opinion. I'd go short, I think. You'd say it's a downtrend, wouldn't you? Looking at that. I'm not a fan of some of the crazier cryptos. So for me, I don't know. How many decimal places does that get quoted to? It's ridiculous. Okay, cocoa, coffee, Virgin Galactic. Hang on a second. Did we look at cocoa? Cocoa is right on its trend line again. Cocoa is, I remember we looked at it last time around when it was down here. And I'm going to take this chart right out. It's right on. Oh, hang on, let's go on a daily chart, might make more sense. There we go. So it's this massive trend for cocoa going back to 2017. It's four-year trend this, and we're right on it. I think we looked at it last time and said it's got to bounce off it, and it bounced a bit for 4 days, and it's right down again. I think it's interesting. I still be looking to be a buyer. I wouldn't be a buyer today, but let's come back to it next week and see where it is. But I'd be thinking about, on 1 day of strength, I'd be thinking about being a buyer with a stop loss, I suppose, the other side of 2140, which are the July 2020 lows. But it's weird. It's really not doing what it's meant to, cocoa, at the moment. So it needs to get a bit of a move on. Virgin Galactic, we did do a video on the stocks channel, either this week or last week, for Virgin Galactic. I think it's a difficult one, isn't it? Because again, the volatility. I know clearly they had the FAA approval for carrying passengers. What else? I think their first flight is July the 11th. Is he going to beat Bezos into space? I'd be a buyer because the trend is up. The question is, where would you buy? I'd be tempted to wait for perhaps a deeper sell-off. I mean, it's gapped up today by the looks of it, isn't it? So it closed yesterday. What was the date yesterday? July the 1st. So it closed yesterday down here at 43. It's gapped up, but it's sold right back. I suppose an aggressive trade, be a buyer now with a stop underneath 42, which is still a 15% stop. And it's only yesterday's low, really. But I think it's also interesting that it's pushed back up near its all-time high. So I did wonder when I did the video on the stocks channel, would we see it investors start to get a bit nervous up here? Perhaps the people who missed on selling out last time round at 60 and saw it drop all the way to 16, see it back up near 60 again and think I want to be a seller. And I also wonder whether all the news for now is in the price. They've had some great news flow in recent weeks. What's going to come out that's going to bump the price up another 15, 20% from here? So I think if it broke through 64, it looks interesting again, 62, 63, whatever it is. But I'd be tempted to sit on my hands and see if there's a better buying opportunity. Let's see what happens. Could you take a look at wheat? Yes. If we've got it. Wheat's another one. A lot of these commodities come right back to their trend lines. I do have a trade on wheat as well. And again, a bit like the cocoa chart we looked at, it really needs to rally from here. And we did get a rally over the last, couple of days ago. So for me, I'd be looking to be a buyer. Where would your stop loss go? I don't know, maybe the other side of 170. But I think it's an interesting market. A lot of these commodities had this great run, March, April, and some into May, and have been quite hard hit during June. So I think it's interesting down here, looking for the bounce really on wheat. Are you still doing courses? Yes, if you go to davidjonestrading.com, there's a course there. They're suitable for beginners or intermediates. If you're making 20% a month trading, it's probably not for you. But if you've never traded much before or you've struggled to make trading work for you, then they could be for you. So if you go to my website, you find out more. So I talk about my strategy that I use in the courses, but go and find out more or drop me an email. Do you think Discovery and Viacom will return to the 90s? Do we mean the 1990s or the $90? What do you reckon? Oof, that is not a pretty chart, is it? What do you think? I mean, for me, I would look at something like that and completely avoid it. But I suppose if you absolutely wanted to have a punt, you could be a buyer and put a stop loss under the most recent major low, which is just below $29. But for me, it's just not a good one at the moment until it starts getting a bit more, momentum. Same for Viacom, really. I mean, look at that. Where's it gone from? 100 down to 44. Again, it's not really my sort of trades or markets, these things that get absolutely clobbered and you buy and hope they go up. So for me, it needs to start building a bit more of a recovery to start to look interesting. Copper, we looked at copper. Palladium. Yeah, Palladium's had a pretty volatile few weeks, isn't it? Let's take a look at Palladium. But again, back on that trend, this has been an interesting one. There's the trend in Palladium. I do have a position in Palladium as well. The trend in Palladium has been up, and there was a really interesting move for chart fans in the middle of June. It pushed out to all-time highs in May, up to 3,000, got absolutely clobbered, back 20%, and the trend line has held. So for me, if I didn't have a trade, what would you do now? Perhaps wait for a sell-off, wait to see if we get a retest of these old lows around 2,500, perhaps. But for me, it's still bullish. We've got higher highs, higher lows. It was only a couple of months ago it hit its best levels ever, Palladium. So I think it's always a really interesting market. Palladium, we did that. Micron Technologies. Yeah, let's have a look. Micron Technologies. Is that Micron? Is that those? Yeah, Micron Technologies. Let's have a look. It's interesting. It's interesting. It's interesting and it's not interesting, isn't it? Because it's gone pretty much sideways all this year, really. So for me, it's more of like a range trade than anything else, isn't it? So for me, if I was a buyer now, and I'd probably rather be a buyer than a seller, I'd be a buyer with a stop loss the other side of 72.50. So if we saw a bit of strength next week, then perhaps it's an interesting shorter term trade down here. But it's definitely lost that trend momentum, hasn't it? This year, completely this year. If it starts breaking below sort of 68 to 72, I think we get a much deeper sell-off. But a bit boring, I think. Do you ever get drawn into moving your stop loss as the market gets close, or are you very strict and stick to your plan? Good question. I am very strict. I've seen people do that. I think it's utter lunacy. They buy oil, they put a stop at 72, the market drops to 72.20, they move their stop to 71.80. It's absolutely the worst form of denial, that is. If you put a trade on and you put a stop loss on, when you put the trade on, you clearly thought the market wasn't going to get there. So what the heck are you doing moving your stop loss when the market does get there? Let's not forget, 75% of people lose money trading. There's another great reason why. So thank you for that question. Yeah, it's absolute lunacy. But for me, no, religiously stick to stop losses. Gold, we looked at gold. Barrett and Investec. Let's have a look at Barrett. Barrett is the UK house builder. UK house prices going crazy, of course, in the last few months. It's a bit, I don't know what you'd say about that. I mean, it's sort of that trend since September has arguably lost quite a bit of steam, hasn't it? I'd probably still be leaning to being a buyer. I suppose you could argue it's right on the trend line, actually. So what would you do? What would I do? I'd be a buyer, and I'd put my stop loss probably down here somewhere at 6.25, something like that. So it feels like it's faded quite a bit. I wonder what the other house builders are doing. It's faded quite a bit, but I'd be a buyer to see if it can get back up to £8 again. But I think if it slipped much below 6.50, it looks like it's all over. It's all over for Barrett. Let's see what happens. And what was the other one? Investec. There we go. It's good, isn't it? Well, I suppose actually it looks good until you take the chart out. Then it doesn't look quite so good. I suppose if you were going to be a bit of a chart pedant, you would say that trend was down, wouldn't you? You'd definitely say that trend was down. So actually, and that's the trend going back to Feb 2018. So we are 3 and a bit years into this. So I suppose if you were going to take that view, you'd go short. You'd go short Investec with a stop loss the other side of 320 or something. From a shorter term point of view, I would still be tempted to be a buyer because it's been quite strong since November last year. So I could be tempted to be a buyer with a stop at 260 and see if we get a squeeze up to 320. Probably the more disciplined approach would be to sit on your hands and wait to see what happens from here. But short term, I'd be a buyer. But I'd be very wary of that big downtrend that's been in place. Interesting ones. I'm wondering why you never use a volume indicator. Good question. I'll tell you why I never use a volume indicator. I never look at volume. I learnt my technical analysis in the 1990s, and I worked in currency markets. And in currency markets, FX markets, there's no official volume. So I never, ever got into the habit of looking at volume for charts. And I've never have. Even when I look at it now, I really don't think it's that important. I think in the major, and that's just my opinion. Someone else may have a completely different opinion, and we both might make money, so there's no right or wrong here. But for me, it's just a habit I never got into, and I never will get into it. So I just don't look at volume. Will natural gas spike? Who knows? Will natural gas spike and break in the near future as autumn low demand looms? I don't know. I think the fundamentals for natural gas at the moment or have been quite strong. Because there's a supply, I think European inventories are at 10-year lows or something like that. So there's a lack, there's increased demand and a lack of supply. But again, the game here is how much of that is already factored into the price. So I really don't know. Like I say, I've got a trade on natural gas. I've been trading a stop up. If it blips up from here, I'll still be in it. If it sells off, I'll be out. I think it's a difficult one to call up here, natural gas. Deere and Company. I did a trade on those. I'm out of it, but I did a trade on those earlier this year. The old tractor manufacturer, isn't it? US tractor manufacturer and stuff. For me, I traded it because we had this great trend we were in. It's fallen out of the trend over the last month, but again, I'd still give it the benefit of the doubt. I probably wouldn't buy it here, but if I was looking to buy, if we got a bit of weakness next week, and I'd put my stop loss maybe the other side of these 320 lows. So it looks like it's clearly, I think, lost some momentum over the last month or so. So sort of interesting if it sells off a bit and we get a retest of those lows, but it has, for me, it's lost some momentum. We got another 15 minutes, so I'll just do the plug. Don't forget that I'm doing this with Capital.com. So go to Capital.com to open a trading account, open a demo account, download the app. To find more about me and the trading course, go to davidjonestrading.com. Any questions after this, drop me an email, david.jones@capital.com. Follow me on Twitter @JonesTheMarkets and follow Capital.com on YouTube, Twitter, and Facebook. Okay. Why is there no correction in the stock market since the last 6 months? Is it normal going in one direction? It is a bit abnormal, I suppose, isn't it? But what can you do? Markets do go a bit abnormal. We've had no decent correction since here, have we? This is September, a really big sell-off. So I don't know. And again, I don't overthink this stuff. For me, that's the wrong thing I'm looking at. It's the same thing, but it's the spider. For me, you can either make markets an intellectual game, or you can make it a game of trying to make money. And for me, I'm more interested in trying to make money. So I don't overthink it. But you're right. We don't get. It feels like a sell-off that we had here in May, where it dropped for 3 days. That looks like the biggest correction we've had since March. A 3-day sell-off. It's just the way the market is at the moment, that everyone seems happy to buy the dips, and here we are, just below the all-time highs again that we set today. What is your opinion about US steel and the problem with China? Because it's gone over 100% up. Okay, don't know. Let's have a look. US steel. Take a look at the thing. I would be a buyer looking at that. I think I'd be a buyer. It's an interesting chart, isn't it? That done so badly. Great downtrend. And then since about September last year, great uptrend. Looking like that. So for me, I would be a buyer now, and I would put my stop probably under $20. So it's lost a bit of momentum over the last few weeks or so, but I'd be looking to see if it can get back up to 30 again from here. But it's an interesting one. I think if it breaks 20, it does look like it's reversing that trend. So let's see what happens. Cleveland Cliffs. We did look at copper. I've seen a few people asking about copper. We did have a look at copper. You can rewind this while you're watching it, or watch the recording when we finish it. Cleveland Cliffs. We did look at those of the week, I think, didn't we? It rings a bell. Trend is up. Be a buyer. Nice little trend chugging along on Cleveland Cliffs. So for me, I'd be a buyer. 18 to 20 seems good support. We did look at gold. We looked at gold in the first 20 minutes or so. Can we have a look at Nike? Oh, that's got a bit of... I remember we looked at this one last week, didn't we? And I remember saying, I always, when they move as quickly as this, I always struggle. And it's moved higher still. The problem I would have is, where would you put your stop? I mean, clearly it's a pretty major breakout, isn't it? Breaking out through 150. If I had to buy it today, where would I put my stop? Probably at 145, something like that. But clearly that's incredibly strong. I don't know if that's an all-time high for Nike. It looks like it could be, actually. Yeah, it definitely looks like it could be. So, yeah, big move for Nike. Carbon emissions. Yes, it's American. It's an American holiday, isn't it, on Monday for the 4th of July. Carbon emissions on the move again. Look at that. We never looked at this until it was James who mentioned it a few weeks ago, and I said it looks like free money, carbon emissions, and the trend promptly stalled since then. But it's interesting that it moved out to new highs for that trend yesterday. Interesting one to watch next week, carbon emissions. So nice little pullback, goes a bit sideways, and bang, off we go again. So the trend in carbon emissions continues. We looked at copper, euro yen. I remember that from last week. That was an interesting one, euro yen. Oh, that was, yeah, because it's right on the trend. There was still, that trend in the euro against the yen going back to May 2020. Again, I'd be a buyer. I'd be a buyer. The closest I'd have my stop would be under 130. It's poked through the trend line. But again, just because something pokes through a trend line doesn't necessarily mean that the trend is over. So I'd be tempted to give it the benefit of the doubt. So interesting. I mean, it's lost some momentum, but interesting one, again, I think, to watch going into next week. How do you see US stock indices going given the jobs report? Well, I think the US stock indices are telling us what they thought of the jobs report, aren't they? Because they have hit all-time highs again. There's the Nasdaq. So for me, the trend is up, isn't it? Silver, we looked at silver, and there's a video on silver that went up yesterday on the channel. I think silver's boring, but perhaps in the short term, it's a buying opportunity. GameStop. Like I always say with these crazy meme stocks, if you're in them and you make money, brilliant. For me, it's very hard, I think, to trade them sensibly. So for me, if I had to do anything with GameStop at the moment, I could be tempted to be a buyer with a stop loss down at 180 or something. But for me, I don't touch these sort of markets because they're just too stupid for me. So there you go. Can we have a look at Editas Medicine? Editas Medicine. Let's have a look. Nice one. Let's have a look at that. What do they do then? I'm guessing it's a drugs company. Clinical stage genome editing company. Okay, let's have a look on the dailies. Again, this is always a difficult one for me. When the stock goes from $100 in Jan, I'm guessing it's dollars, to $30 in May, and now we're back at 55, aren't we? I mean, again, it's quite hard to practice any sort of sensible risk management. I suppose based on the shorter term chart, I'd have to be a buyer, and the closest I want my stop is probably at 42, which is only the low from a couple of days ago, but it's still 20% away from where we are now. So these big volatility stocks, I do have trouble trying to trade them sensibly. Natural gas has been going up the past hour. We did look at natural gas. Has it actually moved that much? No, not really. Yeah, I think I did a video on the channel on natural gas, and we did look at it a bit earlier on. I'm long natural gas and trailing a stop up around 355, I think, at the moment. What does the RSI indicator monitor? Good question. It's overbought, oversold, the RSI. So the RSI down here at the bottom, relative strength index. When the RSI goes above 70%, it's saying the market is overstretched to the upside. When the RSI goes like here in March, below 30%, it's saying the market is overstretched to the downside. So it's used to try and time the turns in the market, but it's not very reliable, is what I would say. Because the problem is, here's a great example, natural gas goes overbought the 9th of June, the RSI is overbought, the market doesn't care that its RSI is overbought and carries on going up. So of questionable usefulness, but there you go. That's the RSI. Do you think pound against the dollar will go to 186? 186? Wow, that is... I don't think I'd be quite that bullish. I think we'd all be going to New York for our holidays if pound against the dollar went to 186, because that would be pretty incredible, because it would be all the way... I don't think we've got the data that goes back that far, actually. But not. I haven't misread that, have I? No, 186. Do you think we're ever going to break? I think that's too long an outlook for me, to be honest. I think at the moment, I think in the short term, we might get back to 145, maybe 150. But even that's proven to be a struggle at the moment. So for me, I've got no idea about 186. It's too long term for me. Apple. Yeah, let's have a look at Apple. I think it's been a bit sideways, Apple, hasn't it? I think there's still a trade in this account on Apple. Here we go, from the 5th of March. Bought them at 119. Where are they today? 138. It's just a bit sideways, isn't it? It's interesting. It'd be interesting if it breaks out again. If it breaks out through 145, if I didn't have a trade on, I wouldn't be a buyer here. Because again, it's, well, where does your stop go? So I think perhaps let's come back to that in a couple of weeks when it's maybe either up here or back down here again. It's just it's just very sideways so far this year, Apple. And I think we bought it at 119. I think it was back in here in March, wasn't it? Which was a good trade. And it's just swinging in this sideways range, isn't it? What's your take on Workhorse Group? Workhorse Group, let's have a look. Here we go. What do they do? Battery sales and leases, battery electrical vehicles and aircrafts. Blah blah blah. Okay. For me, I think if I had to do anything, I'd go short at the moment with a stop above 20. That's what I'd be tempted to do. It's quite interesting that it really fell off a cliff, didn't it? And it hasn't quite managed to build a sustainable recovery. So I think it probably just looks a bit boring and sideways from here. You know, if we looked at that, if we looked at the last couple of months or so. So again, it's not one that would jump out at me at being an obvious trade. If it drifts back, back to $10 again, I think it looks interesting. But it just looks a bit boring to me at the moment. I think that one. So let's see what happens. Restaurant Brands International. God, we've got some new ones coming in today, haven't we? Restaurant Brands International, formed in 2014. American fast food. Okay, merger between Burger King and the Canadian coffee shop, Tim Hortons. Blah, blah, blah. It's a bit of a strange one, isn't it? I don't know. I'd probably have a go at buying it because it made a recovery high in May, so it was still strong going into May. Perhaps would be an aggressive buyer with a stop somewhere under $62. But it just looks like it's lost quite a bit of its momentum, I think, in the last couple of months, doesn't it? So perhaps we're in for some uneventful trading from that one. Dollar index, yes, let's have a look at that. I think the dollar index is really interesting because we swung. I think we got a trade. Have we still got a trade on the dollar index? Hang on a second. Yes, we did it on a live stream. So it bought at 90.22 on the 28th of May. So we're up a couple of 100 points on that. So when was that? 28th of May. Down here, bought it down here. Really logical trade to do, that was, because it had come back to the lows from January. Nice trade that was. I'll give myself a pat on the back for that trade. I wouldn't really buy it here though. I think it's going to be interesting to see what happens if it gets back to 93.50 and breaks 93.50. Because I did say, I think I've been saying on a few of the live streams this year, will this year be the great US dollar comeback? And it has been for some of it, and then it hasn't. But I still think it's an interesting market to watch. I'll perhaps be a bit nervous up here and to think about moving the stop on the open position. But let's come back to it when it either breaks up through here or we get a sell-off back towards the low 90s again. What do you think about buying gold? I think down here for a trade, I think it's an interesting trade down here. If I was a buyer of gold, we did cover this in the beginning. From a longer term point of view, I'm not really interested in buying gold. But from a trading point of view, I think it's an interesting trade down here. And we did look at it in a bit of detail in the first 20 minutes. We looked at crude oil as well. I think crude's taken a bit of a hit. I've just seen I got stopped out for a profit on one of my crude trades. I think I cranked the stop right up. Maybe it's just been a bit volatile. It's spiked down to lows for the day. It's a bit boring, isn't it? Dollar Canada. Yeah, dollar Canadian dollar looks very similar to the US dollar index. Dollar Canada. And it's interesting because it's been in this downtrend, the dollar against the Canadian dollar. So this is the US dollar losing value since March 2020 against the Canadian dollar. So a US dollar would buy you 1.46 Canadian dollars in March and it'll only buy you 123 Canadian dollars today. And maybe it's reversing. I think it's an interesting one to keep coming back to. It's only, I suppose if it had to do a trade, I'd go short on my basis that it's broken out the trend line, treat it as a false break, sell short, and put a stop above 125 is the trade I would do. If next week it rallies and goes up through 125, I think we do have a reversal on our hands. So let's come back to it next week. But for now, I'd go short. That one. It looks quite a good trade, actually. Should we do it? Let's do it. We haven't done a trade on here for a while, have we? Let's do a trade. So 124.86 is the high. Let's go 125.50 is the stop. So we're going to go... what did I say? 125.50. 125.50. And we'll... At the moment, that risk is £2,700 if I'm wrong. I don't really want to risk that much. Let's do... We normally do 100 quid on these, don't we? So what's 10,000? So if I do 9,000... So I'm going to sell 9,000 at 123.60 because I just think that perhaps we're going to go and sell back towards these lows. But if it gets to 125.50, I'll come out. So sell. There we go. We'll go short that and come back and see how it's doing next week. Dollar Canada. Blah, blah, blah. How many days a week? How many hours a day or a week do you spend analysing the market? It's a good question. Not many at all. At the moment, I have got in my own account about 25 trades running, 25 different markets. And, you know, clearly I will look at those once a day to see what's going on and does a stop need to be moved to lock in some profit and stuff like that. But to be honest, that's not even half an hour a day. And then maybe twice a week, I will flick through all the markets that I look at for trades. And that probably only takes me half an hour. So I spend a lot of time looking at markets because of the stuff I do for Capital, the videos and stuff. But actually for trading, you know, I only spend, I'm in front of a screen a lot, but I definitely don't spend more than an hour a day trying to figure out, is there a trade to do? Or looking at existing positions. You know, I'm not, I think as I often say in these videos and everything else, I'm not interested in standing and sitting here looking at a 5-minute chart and trying to figure out where's the market going to go in the next 5 minutes. That really isn't my trading style. You know, I'm much more interested. It's why I like markets like, you know, the Nasdaq at the moment, because it's, for example, or the S&P, because you've got great trends. So for me, if I'm in a trend like this, it's a really low maintenance trade, you know, because I'm just pushing my stop loss up maybe every other day as the market moves in my favour and looking to get into a new position if we get a sell-off, you know. So I'm much more interested in bigger swings over days and weeks than I am. I've got absolutely no interest in what the market is going to do in the next 15 minutes. So it's not very time intensive for me. So there we go. Can we have a look at coffee? Yeah, I missed that one. I think coffee is interesting as well, because I think, let's have a look on the dailies, not the 5-minute, no interest in that. Because it really, I was lucky, I did catch a bit of this move. The longer term trend for coffee going back to here, 2019, really accelerated away. And it's all got a little bit messy over the last month, coffee. So for me, I would still be tempted to be a buyer. I wouldn't be a buyer today. But if we see a bit of strength next week, perhaps there's an opportunity coming in coffee again, as long as 145 holds. Let's see what happens next week. But it's an interesting market, but it's definitely a harder trade now, for me anyway, than it was sort of when it was doing that and just trending up and all very nice. So let's see what happens. We looked at pound against the dollar. Right, I've got to wrap things up now. I've gone slightly over for today. If I didn't get to your thing, sorry about that, but I think I did try and cover a whole load of stuff. Find out more about the company, go to Capital.com. Find out more about me and the trading course, go to davidjonestrading.com. Any questions, any trading questions, don't send me an email saying, do you think dollar yen is going to go up 3 points in the next 10 minutes? But any questions about trading, more than happy to try and answer them. david.jones@capital.com. At Jones the Markets is me on Twitter, and follow Capital.com on YouTube, Twitter, and Facebook. Don't forget, there's the stocks channel we've got. The link to the stocks channel is in the description of this video. If you're not subscribed to us, subscribe to our YouTube channel. We push out lots of market commentaries, not just this live stream. We do 3 different markets every week during the week. And that's it, isn't it? Thanks for coming along. I do enjoy doing these. We always look at some interesting markets in here. Hope you find them useful as well. But we will wrap things up there. Enjoy your weekend and see you all again, hopefully, next Friday.